Hey guys, welcome back to my YouTube channel. I'm very thankful that you guys have watched my previous videos, and I'm very thankful that you guys have subscribed. Please, if you can do so, and if you're new, please subscribe and like the video. So I'm going to start off this week by saying that we're packed with major opportunities, guys. We're in the middle of earnings season, and some of the world's largest companies, especially in tech and industry, are about to drop their quarterly results. This is going to hit key markets like Nasdaq and the Dow Jones Industrial hard. And with some geopolitical tension in the background, we could see even more volatility. So let's get into it and see what we're dealing with this week. This week is all about corporate earnings and some critical macroeconomic data. We've got big players like Amazon, Microsoft, Apple, AMD, and Alphabet reporting in tech, while heavy hitters like Caterpillar are stepping up on the industrial side. With all these big names reporting, we're likely to see Nasdaq and the Dow in a bit of a tug of war for investors' attention. Strong earnings in the tech could push the Nasdaq higher, while weak industrial earnings could weigh on the Dow. So we'll be watching those moves, guys. And the earnings aren't the only data that we'll probably be watching this week. Major economic reports are set to drop. So, guys, these drops include the JOLTS job openings, ADP employment figures, NFP, and the PCE prices. With inflation looking somewhat under control, the Fed has made it clear that their focus is shifting towards the job market, especially full employment. This mix of earnings and employment data will be a big factor how the market will move basically this week. So how does this all impact us as traders? How does it all, like all these things I just spoke about, what does it do? So if tech earnings come out strong, we're likely to see some risk on movement, which could mean a sell-off in assets like gold, as investors would shift into stocks. But if the earnings disappoint or if guidance is weak, we might see gold and other safe haven assets catch a bit to go up. Besides the fundamental analysis, we can get straight into our technical analysis on the swing pairs that we have had. So guys, I've been holding this Auden ZD trade since the 25th, right? The 25th of September. So this trade has been just completely bullish. I really liked how it started to move, but then lately we have been in a bit of a range. Recently, I just closed out a few hours ago on a 2-hour trade over here on my scaling, and I'm still in a position for my original trade, which I have some sort of a confidence in. Of course, we're gonna have to see how price reacts from certain levels. I'm not gonna really go deeply on trading with trend lines, whatever it is. Guys, I'm in this trade. I'm holding it. Price has taken out this high over here, so I'm gonna see how it reacts. I've already secured 2R, so I am fine, right? I am fine. I am on the profit side of this. My target was a 4.4-hour trade, but I could soon probably close out or force to close out a 2R, which could still result in a 4R win overall on the pair. So guys, USD CHF and USD CAD, it's not looking good for us fundamentally. Technically, I feel like it could still go bearish. I feel like it could still go down. It was in a deep drawdown over there, but right now it looks like it's coming back down to the entry. Of course, guys, by the time I'm recording this, it's like 11 p.m., which is GMT plus, and that's kind of where the market is about to close, or the market is already closed right now. So it could be false move. We might see something else during Asian of the time I'm recording this, which is probably, I'm recording this on Monday, so I don't know. I think I'll probably send it on Tuesday morning to everyone else. But guys, fundamentally we are not looking good on this pair, right? Fundamentally, we have the US dollar, we're seeing general bullish outlook, right? Despite a recent rate cut by the Federal Reserve, US data has been solid across board, right? Retail sales, NFP, inflation, and service sector have all shown strength, keeping the dollar rally intact. Even though the Fed rate has hinted another possible rate cut in the coming meetings, the US is holding strong with support from a healthy economy, guys. none of that is kind of changing the whole move of it, right? So now looking at the Swiss franc, we're seeing quite a bit of weakness, right? The Swiss bank or SMB is expected to cut rates again this year due to weaker economic data. Retail sales are slowing down, inflation growth is minimal, and the unemployment rate is high, it's up. This adds a bearish tone to the franc, right? Which generally means that it could lose value stronger against stronger currencies like the US dollar, right? However, with the USD kind of showing strength and the CHF showing weakness, we're looking at a bit of a conflict here, right? Fundamentally, this kind of setup often drives the CHF upwards. So we might start to see the US dollar Swiss franc go up just based fundamentally. And then we can look at CAD, right? The outlook here, I would say probably is a bit mixed. I would say it's a bit mixed, right? This one has been kind of punishing me as well. The market has been in a bullish market overall, I can admit. Overall, in the daily market, it's been bullish. It's been crazy bullish. And I can see how the market is moving, and I'm not really liking it. Of course, but for me, fundamentally looking at this, it's been mixed, right? Or you can even say neutral, whatever you want to use it, right? The Bank of Canada recently cut rates by 50 basis points, and more easing might be on the way. However, strong jobs data and retail sales have kept the CAD from losing too much ground, guys. This week, the Bank of Canada will be holding a meeting that's probably coming up right now, and there is a chance we could see another rate cut, guys. If that happens, we might see further weakness in the CAD. For my USD CAD sell position right now, this doesn't align well with the fundamentals, right? The strong US data and potential for further weakness means USD CAD could trend higher, and I'm willing to accept that loss, right? So, guys, just to sum up those two, right? The fundamentals aren't entirely in my favor for either of these trades. The US dollar combined with CHF and CAD softness is challenging my setups for these sells. So I'm not entirely confident on them. Technically, I am still a bit confident, but fundamentally, hey, the market has been just moving, right? Macroeconomics, I can't really control it. Plus, we have NFP coming up, so holding these trades throughout all of that, I'm probably not going to see that through, right? I'm probably just going to have to close out early, see what the market does, be more reactive rather than predictive, and then try to see how I can. Try to see if I can minimize my losses. I'm still entirely confident on USD CHF more than I am on USD CAD. So moving on. EuroCAD, guys. EuroCAD had a lovely reaction. I was in a bit of a drawdown last week. Price was having a bearish movement here to the downside, so I was kind of losing a bit of steam over there, and then price just started to go up, which I really liked. I really liked the way that the price started to shoot up. So I'm gonna be seeing how this one will play out, right? Fundamentally, I don't really have much to say on this, right? Fundamentally, there were ECB cut rates by 25 basis points, which kind of gives concerns about growth. And then, of course, some of the other data that I mentioned, PMIs were stronger, German, IFO, easy CPI, etc. Those are all due this week, by the way. Those we expect, or I expect those to probably be weak. But besides, of course, fundamentals, it looks good. Bullish market, same way I entered last week. I'm expecting price to have a bullish continuation to the upside. I'm expecting price to take out that liquidity at the top over there. So those still haven't changed. My mental thought on this one still has not changed, right? We have a really good support that price rejected off of. The downside about this one is that it's in a range, right? And trading in ranges is never really that great. So we might see early rejections. We possibly don't even know where. We might see one from there. We might see above. But guys, trading in ranges is not good. I'm not going to make a prediction and say, oh man, it's going to reject over there. It's going to reject over there. I'm just going to trade based off of my strategy, right? I'm just going to trade based off that. If price does not respect what I'm saying, then it is what it is, guys. I took this trade So I took this trade after price rejected from the daily imbalance over here. It's a very small imbalance. A great opportunity would have been if I don't know if you have the balls to, if you could have entered over there, that imbalance all still valid, guys. Uptrend imbalance is visible. I really like it. The market looks like it could go up even further. Like I said, only downside about this pair is that it's in a range. That's the only downside about it. Fundamentally, I'm not gonna go deep on that again, but it looks good so far. So moving on, we have NZD USD, another pair that I took. Price was in a bullish market over here. There was a bullish imbalance. Or I would say just a normal imbalance. The price tapped into over here, which I took my trade based off of. I could have done the same thing I did for, or I was gonna do for Euro USD, which was wait for price to cross my entry and then place a buy stop, potentially limiting my risk or trying to limit my risk on this trade. So I could have done that, but I chose to enter this trade manually, and it looks great. I think price could still go up after rejecting from that imbalance for further higher highs. So now for the pairs that I like to enter right now, I have a few setups running right now. So I have Aussie cat, right? Australian cat, it looks really good. Bullish market, almost same criteria as I go into it. Bullish market, we have the market trending downwards. I am trying to wait for price to get onto this imbalance over here so that I can be able to take a position from it. So guys, my strategy is very simple. Wait on the imbalance and then jump into position. We have break of structure, right? We have an imbalance over there. I am not going to be using any Fibonacci's, right? You don't know my strategies. I've explained it previously. I do not use Fibonacci levels. I do not use any of that. But US OddCAD is another pair that I'm looking at right now. It's looking good. I'm waiting for price to come and tap into this imbalance over here so that I can take a position. Another great pair that I've been watching as well is NZD Cat. NZD Cat has also been making really good higher highs and higher lows recently. Of course, price is still looking really great. It rejected off of this imbalance here over there on the weekly time frame. Price has been just making really good series of higher highs and higher lows. So we're gonna switch over to daily time frame over here, and we're gonna look for an imbalance. And of course, there's an imbalance over there which I will be looking to take an entry from. But guys, I think I will do the same approach as I have done with USD cat. Euro USD, where I'm gonna wait for price to cross my order and place a buy stop. I know it sounds like, oh man, you're afraid of getting tapped in. Trades that I'm not really that confident on, I will potentially just wait for price to cross my entry and then place a buy stop. But if I don't do that, then I would have to wait for a confirmation so I can take the trade, whether it will be in here, whether it will be there. And of course, those type of confirmations come from candlestick patterns, so I can wait for those to occur. But a really good way that has been helping me out is waiting for price to cross my entry and then placing a stop order with a sell stop, buy stop. It doesn't really matter. The trades that you don't have 100% confidence in, then yeah, you can do that. But this trade, I do have a good amount of confidence in it. It's been really trending well. So I am just going to place a dot over here, or I'm just going to enter in instant execution over there. I have good confidence on this pair. So yeah, just to sum it up, OddCat and NZD Cat are both potential trades that I'm going to be looking at to get into. Aussie Cat looks great as well. It just looks like NZD Cat too. So not really much to explain. Series of higher highs, higher lows. It's been moving really good, trending very well. So I'm gonna make a decision. I will potentially just split risk between these two, and then I'm gonna hold till TP or stop loss, guys. Simple as that. So two analysis this week: OddCat and NZD Cat. Those are the two trades that I'm going to be getting into. I kept your USD around here just to show you guys, right? As you can see right here, a trade that if I had placed the limit order would have probably punished me right now. It's not that I didn't have, of course, I didn't have that much confidence, but usually when the pairs start to move differently, I want to be cautious, right? This is why I placed buy stops instead of just entering on market execution. It's a really great strategy too, guys. Right? It's a really good strategy too. Of course, it might mean that you might miss out on some moves, but guys, you can never go wrong with waiting for price to form a confirmation, right? After it forms a confirmation, or at least if you're 100% confident in the trade and you are 100% sure that price can go up, of course, you're willing to take the risk of saying that price can go up, then you can place a buy stop, especially when it's coming down a bit aggressive. So times you can apply a stop order, right? When it's aggressive, when you don't have 100% confidence in it, but you still have confidence that it can move the direction that you want, then you can take it. Guys, if you don't have 100% confidence in majority of your trades, then you probably shouldn't be trading, right? That's the rule. You understand? But it's good to have stop orders. It's really good. It just helps you a lot, you know. It keeps you safe in the market. So guys, take advantage of them. Don't try to get a big head by trying to say, oh, it's gonna move from here. It's gonna. If you don't have 100% confidence and it's moving at such a huge speed, you can let it cross, place a buy stop, or wait for candlestick confirmation. Right. So I think that will be all for this week's video. So or analysis. I would like to thank everybody for watching. Please like, comment, and subscribe, guys. And I hope you really enjoyed my video. And I'm going to be looking forward to the elections as well as the NFP numbers that are coming up. So I'll see you guys very soon.